if there's a lot of talk about inflation, then that starts dominating. What we're finding is that people think, oh, the Fed will get very aggressive and increase the interest rates very rapidly, and that's going to be bearish for gold.
Fair enough. Okay, so we've covered economic growth and inflation, potentially stagflation. Let's finish up on gold. Please give us the latest update from the Hanke Gold Sentiment Index, which, for those of us watching who may not be familiar with this index, it parses articles and texts from the internet and assesses a bullish or bearish sentiment for the price of gold, given what's been written about gold in the press. So please tell us what's going on right now, currently.
Okay, well, now we're kind of in a neutral stall. The sentiment index keeps it gets bearish when the conversation is more and more on inflation. And the reason it does that, the reason it gets bearish and we get a negative sentiment signal when these stories come out, inflation, that gets people bearish because they think the Fed will be very aggressive and tightening up and increasing the interest rates. But we're getting also, as we just talked about, David, with this Atlanta Fed information, we get more and more talk about recession. Then we get a bullish signal because people think that the Fed will back off and they'll be more worried about the economy collapsing and going into recession. So they won't be quite as aggressive and tightening up. That's a bullish signal. So right now we're just flopping between inflation, recession, negative Hanke signal on sentiment, and more talk about recession. If that dominates, that is bullish, and we get a positive number on the Hanke sentiment. So, all right. So right now it's just a standoff. The bulls and the bears are just struggling.
Yeah, the gold price has been reflecting your sentiment indicator in the sense that it's been stalling. I'm just going to end on this thought, Professor, and I'll let you go. There's one, theory or notion that higher interest rates may actually, in today's environment at least, may actually be a bullish indicator for gold. Now, we know that gold and real interest rates have historically held a negative correlation, but suppose interest rates do rise, that does signal to us a deteriorating economic environment, which may be bullish for gold. Is that something that you agree with, and whether or not you consider factoring into the index?
Well, no, that's really not the way the sentiment is going now. What's driving the sentiment is the following: that this step. More and more talk about recession, and people think, oh, the Fed's going to back off. They're not going to be aggressive in raising interest rates, and that's going to be bullish for gold. That's what's driving the sentiment. Or alternatively, on the bearish side, if there's a lot of talk about inflation, then that starts dominating. What we're finding is that people think, oh, the Fed will get very aggressive and increase the interest rates very rapidly, and that's going to be bearish for gold. Very good. That's how it's working. Okay. The two key words are inflation and recession.
All right, Professor, I'm going to jump back to economic growth and the GDP forecast in just a minute, but I want to throw out a hypothetical scenario because I love doing these with you. Now, suppose you are in the Federal Reserve, suppose you're in Jerome Powell's position right now, and you have to make the difficult decision of either letting inflation run hot, which is basically doing nothing, not trying to reduce the money supply, and keeping the economy rolling, or option number two, tighten interest rates, which is what they're doing now, but potentially over-tighten, like you said Volcker did, and cause a recession. What would you pick, one or two?
Well, I'd pick three. And three is I'd want to get the money supply down to the golden growth rate of about 5 to 6% growth rate for M2, that measure of the money supply. And that would allow eventually, the inflation rate to get down to 2%, which is the Fed's inflation target. So, and that would allow for a smooth landing. We gradually would get inflation out of the system. It's going to be around, by the way. It will be around for the next couple of years because we have been growing the money supply on average since early 2020 at about 18% per year. That's about 3 times higher than the golden growth rate. So that's already baked in the cake. That excess money is out there. We're not going to get rid of it. It will eventually come through the system as inflation, no matter what you do today. Even if you overdid a tightening and you had a recession, you're still going to have that inflation to deal with. So the worst of all possible worlds would be that they don't look at the money supply, which they're not looking at. They're flying blind, and they overdo the shrinkage in the balance sheet of the Federal Reserve, and they increase interest rates too much, and we have a recession. Then you're going to have stagflation.
Yes.
A recession and inflation. And I think there's a pretty good chance that we will have that. And that Atlanta Fed information that we were talking about, that now forecast, does make one think maybe things aren't looking so good in terms of real economic growth.
Yes.